Hey guys, welcome back to my YouTube channel. So in my last video I was explaining sort of how Warren Buffett in a way has fooled the industry in thinking, oh, you could just be a long-term investor and become like him. Well, being a long-term investor you can make money, yes, but being like him, not necessarily, because of the facts I mentioned in the last video, which I'll leave in the top right hand corner of this video so you can click and watch that one. To sort of explain how he first managed money for other people. That helped him generate substantial wealth first himself, because obviously he was taking fees from that, and then use that money to then invest and make more money off his own. So this video I'm going to sort of explain some investors you should follow that are better than Warren Buffett, and those are people like Carl Icahn. And you know, the reason why you should follow these investors is to sort of understand their thinking and their knowledge and their sort of investment process. And also because if they get behind a stock that you own or you're thinking of owning, you can generate money. And it's as simple as that. It doesn't mean you just go out and blindly buy, but you have to be wary enough of exactly what they are doing. So in this case, Carl Icahn, a legendary investor in my opinion, I think one of the best investors of all time, but way better than Warren Buffett. Again, he was trading his own money, ran a hedge fund, and now still makes money by investing his own private wealth. So the lessons you could take, or the lessons you could learn from all these investors that I'll probably summarize in this video, is one, don't always feel the need to hold something forever, like how Warren Buffett's thesis is. You might hold a stock for a while, but especially in this day and age, especially with technology companies, technology is changing so rapidly that a company that within 5 years could boom, a technology company, and then after that be irrelevant. So you got companies like even Oracle. I don't know if many of you've heard what's going on with their positioning and their stocks. Is that now every pretty much quarter that they're having, they're missing estimates, missing earnings. The stock hasn't really outperformed. Well, it did have a bit of a decline, but it's pretty much recovered. But I think that's more about market sentiment rather than the company itself. But Oracle is now, at least by the forefront of it, looks like is being a company that's sort of out of his generation now. It's just like how IBM was, IBM the same principle, where they were not constantly, and the other companies came and they're not constantly changing and developing. Other companies came with cheaper, more innovation in their products, and ended up surpassing IBM. And Warren Buffett is one investor. If you had followed in IBM, I don't know if he ended up selling for a loss, but he definitely didn't make much money at all in IBM, and he's held it for a long time. So that's another thing. If you're, again, with inflation, you've technically lost money, right? If you've held a stock for 10 years and you made no money, you've technically lost money, because you've made literally no return on it, while inflation's at, say, averaging 1.5–2%. So yeah, IBM is another one of those companies. So especially if you're in technology companies, it's not a good idea to be in the company forever. So the best way, in my opinion, to make money in the markets is to understand and get a combination of everyone. So that is Warren Buffett, that is Bill Ackman, and Carl Icahn. So Bill Ackman and Carl Icahn, let me just go a bit through their investment thesis. So Carl Icahn has obviously been a hedge fund trader, so he's somebody who does hold positions for a while, but he ends up making changes in the companies. So as a retail investor, what you could do is look for companies that are making those changes, whether they have an activist investor or not. So there's companies in the UK that are having a poor financial situation, such as a company called Standard Chartered, which had really big problem. They had their loan impairments that had really ballooned, and that brought the stock down from literally 17 quid all the way down to about 4 quid. And then you got Bill Winters that entered the market then as the new CEO and helped to turn it around. And since then, the price has done pretty well. And I've been a holder of this stock for a while now. Whether it's the time to buy it now, I don't think the changes. He did make good changes, but it's still not enough to turn the bank around. So I'll probably sell the stock. But I'm just trying to give you examples of how you should look for companies that are now turned around, become undervalued, but they're actually having a turnaround operation. So that's Carl Icahn's investment thesis. Warren Buffett's I've explained in the previous video, so you can watch that in the top right. And Bill Ackman is somebody who basically is like Warren Buffett, they say, but he's got a bit of Icahn in him. And more importantly, he is somebody which is, I wouldn't say risky, but it is a way to make wealth for especially retail investors like us, is concentrate your portfolio, say, to 10–20 names. Why bother diversifying so much and getting 50, 60 names and putting small amount of money in each, when if you research 10, 20 proper good names of sectors that you understand and have researched and put money on them, and if there are companies that are, you know, really, really good and have a good future, and, you know, 5 years, if even half of them work and they double in value, triple in value, you make good money. So those are sort of the investors that, you know, in my mind, you should pick and get knowledge from each of them. I hear everyone talk about Warren Buffett, especially with the retail space. So I wanted to let people know and be aware of people like Carl Icahn and Bill Ackman, because these are the people that you should really be looking at and listen to them speak on CNBC and CNN, rather than just Warren Buffett, because there's a lot of garbage that comes out of Buffett's mouth as well, which he does because he likes a good public image, which I don't blame him. That's his, you know, viewpoints behind it. But people like Carl Icahn, they don't give a shit. You know, he's on the media, he's berating people, he's being honest, he's speaking out. He says whatever he wants. So yeah, so that's why I want to make this video, so you guys sort of understand why you shouldn't follow one just investor like Warren Buffett and think his investment process is the best, and secondly, why and how his thesis or his way he invests is not going to necessarily make you a billionaire, let alone multi-millions, right? You want to use these different knowledges and find companies that are undervalued and find some growth in them. And if they are, you know, it doesn't have to be a long lifetime growth, thinking about your pension for 30 years. Rather than that, it should be something that you could flip around in 3-5 years time. But yeah, no, I've made some previous videos about specific names actually. So for those of you wondering that, you know, why don't you spill out some names, I have done so. I will leave the link for those videos in the description, or maybe pop them up on the right hand corner of this YouTube page. So yeah, please subscribe, watch those videos, because there's some of them, especially these Chinese companies, Chinese technology companies that are listed in the US, that have really, really good scope and good futures. So I've analyzed one of them as well, so you could watch that video and let me know what you guys think. Thank you all for watching, and see you guys in the next one.